something feels different about this video. In today's video, we're going to be talking about 3 stocks that the Swiss Central Bank bought recently. I'm going to give you my thoughts on each one of these 3 stocks, and we're going to look to see if these were actually good investments here by Switzerland Central Bank. And if you stick around to the end, there's actually going to be one surprising stock, apart from these 3, that they bought, which will probably leave you scratching your head. Guys, if you enjoyed this video, make sure to drop a like down below, but without further ado, let's get into it. Now, there's been a lot of speculation around the US Central Bank starting to directly buy US equities, and while this may be something new for the US, other central banks around the world have been buying US stocks already. Like I mentioned, one of these buyers is the Swiss Central Bank, and they bought quite a bit of each position that we're going to go through in this video here. So in no particular order, here's the first stock on the list. First on the list is a $1 trillion giant Apple. Apple is one of the most resilient stocks in the stock market, and during the crash earlier this year, it held up fairly well. It dropped around 30% at its lows, which did do better than the broader S&P 500. The amazing part though is the recovery here that we've seen in Apple, and since its bottom, the stock is up over 40% from its lows. This is quite the recovery and quite some impressive gains in the span of only a month and a half. Now, we don't know when exactly the Swiss Central Bank bought these shares of Apple, but we do know that it was in the first quarter, and we know it was around 3 million shares or so that they bought, which added to their existing position. Assuming they bought at the bottom, this means that they spent around $700 million worth on Apple stock in just a quarter, and this brings their overall position to 17.3 million shares, or at today's stock price, $5.45 billion worth of Apple. Not to mention, with Apple, they will also be receiving a dividend, and although it's only around 1% right now, the growth rate and future growth potential for the stock's dividend is astronomical. So this will be a very lucrative investment in my opinion over the long term, especially if they reinvest those dividends and let it grow over time. Apple is an incredible company. It's a $1 trillion company for a reason here, guys. And it's no surprise to me here that even central banks around the world find value in the stock, stability in the stock, safety in the stock, which is why they're buying Apple here, and I completely agree with this purchase here. Now, the second company here, General Electric, is not as exciting of an investment to me, but I know a lot of you watching actually do hold the stock as well. GE used to be a very stable investment until recent years when the company had fallen flat on a lack of innovation and progression in their business. The brand name still lives on, but the structure of the business has changed fundamentally many times over the last few years. It's hard to really think, guys, that GE stock will ever turn things around to where it was before, because you can see here, since its peak in 2000, it has lost over 50% of its value. And really, it hasn't shown any signs of turning things around, but investors still remain hopeful. The central bank here added 6.4 million shares to their position in GE, presumably around $40 million worth of the company, which adds to their total position, which now sits at around 33.9 million shares. At today's price, this is valued at just over $200 million. Now, this is quite a sizable position, but nowhere near as large as their $5.5 billion stake in Apple. GE also pays out a dividend. However, in recent years, it's been slashed as the company is looking to save on any spending possible to help with the long-term health of the company. Will the dividend grow again? Maybe, but it won't be anytime soon in my opinion, as this business is a slow mover, and turning things around, even if they're successful in doing that, will take time. GE is a business that I'm not really interested in, and it's actually in stark contrast here to Apple. GE has just failed on innovation, failed on adapting, whereas Apple has succeeded in innovation, pushing the boundaries, and adapted to changes in the world. I'm not really sure what the reasoning behind buying some GE stock is here. Maybe they believe that this company can turn things around and become a giant in the world once again. But you could tell by the size of the position here that they don't feel as confident in GE as Apple, and rightfully so. And if it was my money, I would not be putting any into GE personally. The third stock they purchased was Disney, and stick around here because there was a fourth unexpected stock they bought as well, which we'll cover in a minute. But Disney is going through some tough times right now because of the global issue, literally shutting down their parks, cruises, sports, and movie theater experiences. This has resulted in Disney stock down nearly 30% off its highs, and it was down over 40% at the lows back in March. In my opinion, this sell-off is justified for the short term, as Disney will struggle to report good numbers for the remainder of 2020 and possibly some of 2021 as well. However, the long-term outlook on this business, in my opinion, still remains intact and strong. And if you want to see my full analysis on Disney, I did create a video on that recently, so make sure to check that out at the end of this video. Now, in the quarter, they added 1.3 million shares of Disney, which has a value of around $120 million, and this gives them a new total share count of around 7 million shares in Disney stock. This totals their investment in the company to around $750 million worth at today's prices. This is not a small position, but a good stake here in a world-class business, in my opinion. Disney also pays out a good dividend, nothing too crazy here, and it's paid out twice a year typically, but as you know, they will not be paying out a dividend for the first half of 2020, as they need to conserve cash and really keep the business with a cash buffer just in case their parks and cruise business does not pick up as quickly as expected. Disney is a solid investment in my opinion, and if you have a longer term horizon, it's hard to really argue with the value that you're getting in this stock today. Yes, things are not going to get better for Disney in 2020, probably 2021, maybe even 2022. But if you can hold this investment for 5-10 years or even longer, it's probably going to be one of the better performers in the S&P 500, at least in my opinion. There's many things about Disney that have just been kind of its core business for many, many years, like its parks. But the company is also innovating with things like Disney Plus and streaming, direct to consumer. So there's a lot of growth potential in this company, and sooner or later, investors will come to terms with this. The price will reflect that, and I think as of today, the pessimistic around this company is what's providing such great value in the stock price. Now, for those of you that have stuck around to this point, the bank also added shares in another company which surprised me. So they added shares of Aurora in the quarter, which is a surprising move, as you know, as this space is typically regarded as taboo, high risk, speculative, and many investors and countries around the world stay far, far away from these type of companies. And looking at Aurora stock here, no, don't be fooled by it. The stock didn't just spike up recently and make those shareholders rich overnight. In fact, what happened was the company did a reverse split because their share price was under $1, and this was going to lead to them getting delisted from the exchange. If you're not familiar with how this works, I did create a video on that as well, so check that out at the end of this video. But essentially, no, if you were holding Aurora stock like the Swiss Central Bank here, you did not get rich overnight from this reverse split. So anyways, guys, let me know what you think about these 3 purchases that the Central Bank of Switzerland did here in the last quarter. Do you agree with them? Do you agree with their Aurora pick as well? I'd love to hear your thoughts in the comments section down below. I provided you my insights here. Apple I completely approve of. Disney I completely approve of. But Aurora and GE are not investments for me. Also, I want to hear your thoughts and your opinion really on whether you think that the US Central Bank will also be purchasing US equities directly sometime in the near future. If that does happen, it's going to make some pretty big headlines here, so stay tuned for that. But until it does, let's discuss what the consequences could be, whether they should or shouldn't do it. Just let me know all that stuff in the comment section down below. Guys, thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one.